Greetings and welcome to another video. We're going to do another debunking over here, and similar to others that we have done in the past about how people think quantitative easing will cause inflation, but this one's going to be a little different because we're going to feature a well-known economist and someone who is very decorated in the economics profession, but it's a little different than other PhD economists in that he is really big on freedom and the free market and things like that, and he's right about the things he says about that. But in this video, we're going to explore some of the problems that we see in libertarian thought, because libertarian thought has not adjusted to the 21st century, and they're some of the biggest believers that money printing causes inflation, and therefore you must buy gold, you must buy gold. And the other problem we're going to expose over here is, like many other PhD economists, Mark Skousen thinks that repeating the past is the same as the future, and he often gets confused between the past and the future. Now, to be completely fair, the Kitco News channel is desperate to pump up all metals and to boost metal prices, and that is its primary function as a channel. And most of this video is not about gold or inflation, so the title they chose for their video is perhaps misleading relative to the entire content of the 20-minute video if you were interested in watching the entire interview with Mark Skousen. I have the link in the description box below. And many of the questions by the interviewer are around wanting him to say that there is going to be high inflation, therefore gold will go up, and he does agree to say that, and he thinks that, but that is the cherry-picked portion that Kitco has placed as the title of this video, which is somewhat unfair to Mark Skousen. Now, Mark Skousen was born in 1947, and therefore is a product of a different time. The 1970s were obviously his formative years as an economist, and therefore he thinks that quantitative easing will cause 1970s style inflation, but he's not as fanatical about that as some much younger people who believe there's already hyperinflation, for example. So to his credit, while he believes what all economists believe, he's less fanatical about it than you would expect someone of his generation to be, and he does correctly recognize that the market adapts to high prices by reducing demand or finding alternatives. So we will look at portions of this interview and debunk the statements accordingly.
And not only are you the producer and founder and president of Freedom Fest, of course you're a renowned economist. You've published over 25 books, an award-winning, internationally acclaimed economist, and also a professor and a presidential fellow at Chapman University. So let's focus on the economy and the government's response to COVID, because of course that is stoking concerns that this unprecedented level of fiscal and monetary stimulus is going to be very problematic as far as inflation is concerned as a starting point, and of course then debasement of the dollar. What's your thoughts on where we're headed with regards to inflation?
Well, I think there's a positive and negative going on. I'm not particularly impressed with the excessive stimulus packages, and which is encouraging people not to work, and so there's a labor shortage going on in the United States right now at many different levels. Inflation is roaring back, all because government's spending more, and the Fed is engaging in more quantitative easing, easy money policies. So I think inflation is rising. It's dangerous to reignite inflation in this country. At the same time, they backed off their regulations, and look what free enterprise has done. There are small businesses coming back to life, restaurants coming back to life. So that's encouraging that GDP is expanding rapidly. So I think government needs to back away. But meanwhile, they've left a terrible legacy of excessive debt, and we're going to have to...
Okay, to Mark Skousen's credit, he did not take the bait from the interviewer about how money printing debases the dollar, because as we know, as I speak about every month, the United States is just 25% of world quantitative easing. You can see my video over here to learn more about that if you've not seen it already. So how can the dollar be debased when the other major central banks representing the other major currencies are also printing the same or more? Japan has printed 4 times as much money relative to the size of its GDP as the United States, but nobody says the Japanese yen has been debased. In fact, the conversion rate between the US dollar and the Japanese yen has been pretty constant for 30 years. So we continue.
Pay that debt, so that's a real problem.
Well, you know, Mark, the argument is being made that people are staying at home because of government intervention, because of these unemployment benefits, and that it is hurting free enterprise, it is hurting small businesses. So as much as the free market wants to step up and get the economy back on track, government intervention is getting in the way. What's the solution there?
So I actually think the Biden administration, this is their backdoor way to get wages to go up, because the private companies are going to have to offer more wages to get these people off of the dole and back to work. They couldn't get the $15 minimum wage through the Senate, and so this is their way of getting the $15 minimum wage. But it does have a cost. The cost is companies are raising their prices to cover the increase in their labor expenses. So this is all inflationary. So I think the labor shortage should gradually disappear. I would certainly hope the government, I noticed the Republican-controlled states are rejecting the idea of extending unemployment compensation, and I think that's a good idea.
So focusing back on inflation, and the Fed is expected to meet next week. We've got Fed Chair Jerome Powell still insisting that inflation is transitory, and he's pointing to lumber prices as an example, saying, look, lumber skyrocketed, but it has erased all of the gains of this year, although it's still higher than it was before the pandemic. He's also saying that the reason we've got hotels and flights going up, it's because of pent-up demand caused by the pandemic, but that ultimately prices will settle on their own. What do you think the Fed should be doing with regards to its easy money policies? Is it time for it to start scaling back?
Yeah, I think Powell is correct that these are short-term shortages like rental cars. They're now buying a lot more cars back in order to reduce the rental prices, and lumber prices are coming down because the market responds to incentives. Higher prices do encourage greater output. But at the same time, if the government doesn't cut back on their own quantitative easing, so yes, while supply is increasing, demand is also increasing as well. That's going to result still in an inflation problem. So I think Powell is a little too optimistic about the problem of inflation. It's here to stay, and it's going to last for a long time. Friedrich Hayek, the great Austrian economist, inflation is a tiger by the tail. And it can easily get out of control as it did in the 70s. It's a very dangerous game. And so I'm really concerned that the government is acting irresponsible at this point and needs to be more settled in its approach and maybe be less inflationary than it's been in the past.
So yet again, the two major flaws continue to persist. There's no recognition by Mark Skousen that the quantitative easing the U.S. does is only 25% of the world's total. All other major central banks are doing the same or larger amounts of it. And also no recognition that quantitative easing has been going on for 12 years. The notion that QE is now going to cause inflation after 12 years of it going on is simply absurd. He's acting as though quantitative easing has only begun since COVID and is only being done by the United States, and only under those two assumptions can one have the type of answer that he just had. So obviously there's no understanding of the new economics of technology, and he's still embedded in a 1970s era mindset, or perhaps even an earlier time than that in Mark Skousen's case. So we continue.
Larry Summers agrees with you.
Oh,
He
yeah.
says that the government has embarked on the least responsible policies than he's seen in the past 40 years, and he is one of several that are saying we could be headed to a similar inflation situation like we saw in the 1970s. How likely do you think that is?
I've disagreed with Larry on a lot of things. You know, he thinks that there's a stagnation thesis and our economy's stagnating and all that sort of thing, and I think we've moved away from that. But he's clearly right on the inflation sign of things. Inflation is out of control. It's much higher than Powell and the others expected. They admit that. They say it's temporary. Well, we'll see about that. I do think, though, that gold tends to be a leading indicator, and gold is moving back up, but it still hasn't broken above that $1,900 level. But if it does break through it, go to 2,000, go to 2,100, that suggests a serious inflation problem.
So he said inflation is out of control. Out of control, really? We just saw from my video last week that the CPI 10-year compounded growth rate is 1.9% a year over the last 10 years. That is out of control. And commodities have been in deflation over the last 10 years. How is that out of control? One could say things are edging higher a little bit, but not enough to move the 10-year average up by any significant degree at all. To say out of control is just insane. That is his definition of out of control. As I've said in my earlier videos, it's not even beginning to be a problem until the 10-year average growth rate of the CPI is 3% a year, and the 10-year average growth rate of the Goldman Sachs Commodity Index is also 3% a year. When both of these are above 3%, which is not a high number at all, but that's when I'll at least say that, yeah, things are getting a little high, we should perhaps scale things back just a little bit until they're no longer above 3%. Secondly, did you hear what he said about gold? He said that gold is a leading indicator. Now that contradicts what he said before. Gold has not been rising over all this quantitative easing during coronavirus for the last 18 months. It's still $1,750. So it's not rising, therefore it proves there's not going to be inflation, as per his own statement that it's a leading indicator. And then he said the funniest thing of all, which is that if gold gets to 2,000, then we have a dangerous inflation problem. You can see that as the Kitco headline as well. So wait, if it rises, does that mean inflation has already happened and the rise is evidence of inflation, or that inflation is going to happen because it rose? He's effectively saying, if gold rose, then gold rose. Wow, that's brilliant. Such a decorated economist, and most of what he says is, well, if prices rose, then there is inflation. Really? I mean, that is some brilliant insight. If prices rose, then that means there is inflation. And that is not a prediction. No matter how you interpret whatever he said, there's no prediction inherent to that. He's saying if it rises to 2,000, then we have a dangerous inflation problem. Whether that means inflation has already occurred or is about to occur is a rather important detail that he has missed. So again, I don't want to be too hard on Mark Skousen, because he's one of the few PhD economists who actually says low regulation and the free market system is good. And he's clearly a very nice man, obviously. But you can see how deficient the thought is in these decorated PhD economist circles. They don't know the difference between past and future, and they don't know what a prediction is. They believe talking about the past is the same thing as a prediction, and that's why this entire profession is hyper-theoretical. The notion that you would make a prediction and stick to it and be held accountable to whether you are right or wrong is completely alien to them. They don't even know what a prediction is, and that's what we're seeing over here. So anyway, longtime viewers saw a lot of familiar points repeated over here, but I just wanted to expose another example of what I'm talking about. And also shame on the Kitco News channel for trying to push an inflation narrative under the belief that that will help gold go up, because the whole purpose of Kitco is just to boost gold prices, and the fact that it's one of the only assets that has not been rising at all in relation to even other commodities is probably a source of a great deal of frustration for Kitco.
Yeah, we had gold just breaching 1,800 as of last Friday, I believe. $1,803. Quite frustrating for people that are seeing the rise of inflation and not seeing that reflected in gold prices yet. But
see Mark Cuban's mockery of gold as an investment thesis in this video over here, and that's why they've never had Mark Cuban back on the Kitco News channel since that time. Anyway, I hope you found this video to be both informative and entertaining, and if you like this type of content, I encourage you to subscribe to this channel. Thank you very much for watching.